Welcome to BWC News. I am Elizabeth. The world opened a wave of U.S. debt selling, U.S. debt emergency, the United States insolvent, economic recession, shorting Vietnam after shorting the richest man in India, or just the tip of the iceberg, the essence of the United States harvest India? Indian economy or setback 20 years? The market value of billionaire Gautam Adani's company once evaporated $117 billion after the release of a shorting report by the well-known U.S. agency Hindenburg. The debt-ridden Indian conglomerate then began taking steps to address investors' concerns about leverage. The Adani Group announced that the Adani family would pledge some of its shares to repay loans early and that the port unit had pledged to improve its debt ratios. Many people, in focusing on the shorting of India's richest man, are only focusing on the event itself and not seeing the bigger picture and the crisis that India and Vietnam are experiencing. In fact, shorting India's richest man is just the tip of the iceberg. The essence is the dollar capital in a big game, harvesting not only the richest man, but also the richest man behind India, but also as an emerging economy, the United States investment growth of Vietnam. Adani, sitting on a listed company, across the energy, real estate, transportation, finance, food, defense, to say a little bigger, is to hold the lifeblood of the country, grasp the livelihood of the country. So, we now look at Wall Street's shorting of the richest man in India. It's not simple. The listed companies behind Adani are involved in almost every field, which also took the Indian stock market to collapse. The Indian government urgently stepped in to reassure the market. Indian Finance Minister Sitaraman issued a statement saying that regulators will do their due diligence and that the problems of Adani Group will not affect the Indian economy. At the same time, the Indian Securities and Exchange Commission announced that it will strengthen the trading control of the shares of listed companies under the Adani Group and raise the margin requirements to curb short-selling behavior. According to statistics, foreign investors are fleeing the Indian market in a big way, and stocks related to Adani are continuously being sold off, falling by 5% to 10%, and Adani has fallen from the top richest seat in Asia. This incident has produced a chain reaction. The Indian financial markets are experiencing a storm. Data show that since 2022, when India began to tighten its currency, foreign institutional investors have withdrawn financial assets worth up to 20,000 billion rupees from the Indian market, even equivalent to more than twice the amount of outflows during the subprime crisis in 2008, the highest annual withdrawal in at least 20 years. Many people may question, the Indian economy is so good? The economy is growing at over 7%, so why is it being shorted by funds? To a large extent, from foreign investment, but also Vietnam as an emerging economy, especially receiving investment from the United States. Last year, the United States supported India and Vietnam in order to let these two countries to replace China's manufacturing industry, in order to complete the industrial chain, de-China. In fact, not only last year, but also in recent years, the United States has been investing. Especially after the outbreak of the epidemic, the United States opened a big release of water, an extra $5 trillion. In addition to some of these funds in the United States, most of them flowed to emerging markets such as India and Vietnam. So, the bull market of Vietnam and India was achieved. Since 2008, India has had a 14-year-long bull market, and even though the world suffered a financial meltdown last year, the Indian market is still very optimistic. Vietnam, on the other hand, is more miserable, with funds flowing out of Vietnam across the board. Hot money flowed into India like crazy, and the Indian stock market reached a new high. With India's richest man shorted, signs of U.S. assets shorting the Indian market are beginning to emerge. The U.S. is at great risk of debt this year, approaching $32 trillion in debt, hitting the debt ceiling several times, and the world has opened a wave of U.S. debt selling. Since the Federal Reserve raised interest rates last year until November 2022, global central banks have sold a net $736.9 billion of U.S. debt. Statistics, as of last October, China sold more than $150 billion of U.S. debt, correspondingly increasing its gold reserves. Moreover, the founder of the world's largest hedge fund Bridgewater Dalio and many other analyses believe that China may sell up to $700 billion. In addition, the largest holder of U.S. debt, Japan, is also selling. Japan sold up to 210 billion US debt last year. According to the analysis of the US financial website, Japan may have the possibility of selling $700 billion in 2023. U.S. Treasury Secretary Yellen warned that this would bring a crisis to the United States. At the same time, the U.S. economy is also facing recession. Continued interest rate hikes make the U.S. debt service costs too high, and interest rate hikes are more detrimental to economic recovery. Even though the Federal Reserve raised interest rates by 25 basis points in early February, but compared with last year's aggressive rate hikes, has begun to tighten the pace, and is expected to slow down interest rate hikes this year, the dollar also began to weaken. In this context, the dollar asset shorting India's richest is worth examining. The Indian economy has been unable to avoid becoming the target of wealth harvesting by Wall Street groups represented by U.S. economic interests. And in the face of this shorting triggered by the risks of the Indian financial market, the former chief economic advisor to the Indian Ministry of Finance said in an interview that the Indian economy could be set back 20 years if it fails to deal with the debt and credibility issues. Seems alarmist, but we need to know that the most deadly financial sniping, how many emerging economies are in the financial blocking, from then on into a crisis into the mire. For example, Turkey, Venezuela, Sri Lanka, Argentina, etc., the economic crisis and recession in these countries are closely related to the United States. The influence of the dollar hegemony in the ability of the dollar capital really should not be underestimated. Even now the US debt crisis, but shorting India's financial crisis is still hanging over India's head. What's more, India's opposition parties are demanding an investigation into the relationship between Indian Prime Minister Narendra Modi and India's richest man, Adani, which is also risky for the entire country, a credibility and political risk. Top Indian officials have taken a stand, saying that the Indian government has nothing to do with the Adani Group incident, but the ferment of public opinion here will indeed have some impact. According to Bloomberg, Adani's investments in capital-intensive projects such as airports, power plants, and data centers have been central to India's economic growth under Modi's rule and are close to him. So the Adani crisis has spread to the Indian political and economic spheres. Over the years, India has been jumping very aggressive, a kind of who does not serve the stand, especially even if the United States wants to foster India to replace China's industrial chain, but the United States will not be used to India. For the current financial sniping suffered by India, how do you see it? Welcome to leave a discussion in the comments section.